Okay, let's just dive right into this. If you've looked at the markets recently and just felt, well, a sense of chaos, you're definitely not alone. It feels like we've been hit with a double punch of uncertainty, and it's sent everything from the Dow to the NASDAQ tumbling. But what if I told you there's a clock ticking on this chaos, a very specific 150-day timeline that can help all of us make sense of it?
See, the real key to navigating the storm isn't about trying to guess what happens next. It's about understanding the timeline. We're going to use what we'll call the 150-day calendar as our guide. This is how we turn that big, scary, unpredictable fear into a manageable, time-bound problem. So let's break down exactly what that means.
First things first, why is everyone so spooked all of a sudden? Well, it really comes down to two very different, but equally powerful shocks that hit the market at pretty much the same time. We're calling it the double punch.
So, on one hand, we've got the tariff shock. And here's the wild part. The Supreme Court actually ruled against the old tariffs, which you'd think would be great news, right? But nope. Instead, the president immediately used a completely different law, the Trade Act of 1974, to slap on a new 15% global tariff. This just left the market swimming in even more policy uncertainty. And then, at the exact same time, Citrini Research drops this bombshell report predicting mass white-collar unemployment because of AI by 2028. And that just sent a wave of sheer panic through the tech sector, causing this massive sell-off in software stocks. This quote right here, it really gets to the heart of it. The real fear isn't just one tariff or one scary report. It's the perpetuation of uncertainty. It's that feeling that the rules keep changing, that the future is just fundamentally unpredictable. That's the stuff that causes real panic. Okay, so that's the feeling, the vibe in the market. But how does this fear actually show up in the cold, hard numbers? Let's switch over to the data and see how this is all playing out in real time. And the data tells the story pretty clearly. I mean, you see the Dow down over 1.5%, the NASDAQ and the S&P 500 also dropping more than a full percent. This isn't just one little corner of the market, it's a broad-based retreat, which tells you investors are pulling back pretty much across the board. And if you want a single number to just capture the mood, this is it. A more than 10% spike in the VIX, Wall Street's fear index, in a single day. A jump this big, this fast, it signifies a major, decisive shift to a risk-off mentality. The market is officially bracing for turbulence. And you can see exactly where that money is going. It is a classic flight to safety. Capital is pouring out of the riskier assets, like Bitcoin, and running straight into traditional safe havens like gold and U.S. government bonds. This is basically the market building a fortress to hide from all the perceived risk out there. So what's driving this behavior, especially that huge software sell-off? It's a textbook case of what psychologists call System 1 thinking. This is your gut reaction. It's emotional, it's reflexive, it's automatic. That AI report created a scary headline, and the market's System 1 brain just smashed the sell button without really thinking through the long-term reality. And just recognizing this is happening is the first step to avoiding it yourself.
Okay, so that's the problem. A storm of uncertainty being fueled by these emotional reactions. So let's pivot to the solution. How do we build a strategy that not only gets us through this storm, but also helps us find the opportunities hidden inside of it? Here's the playbook, and we've broken it down into two distinct parts. In the short term, the goal is simple: preserve your capital. We're looking for shelter from all this volatility. That means assets like gold, silver, even Berkshire Hathaway, things that have a low correlation to both the tariff and the AI shocks. But at the exact same time, we have a long-term goal to capitalize on this emotional sell-off. This means we can selectively look at sectors like software, defense, and energy to find fundamentally strong companies that have just been unfairly punished by all the panic. So what should you do, like right now? Here are 3 concrete rules. First, don't make any sudden, impulsive moves before we hear from NVIDIA. Their earnings report is a massive event that could totally change the market's mood. Second, resist that urge to join the panic selling of software stocks. The Citrini report is a hypothesis about what might happen over many years. It's not a current reality. And third, do take a look at your gold allocation. Its recent strength really proves its value as a hedge in times just like these. Now, let's bring it all back to our central theme. This entire strategy operates within a very specific time frame, so it's time to put the key events on our 150-day calendar. This timeline is our map. Today, the new tariff went into effect. Coming up fast on February 26th, we have 2 massive events: NVIDIA's earnings and that critical PCE inflation report. But the most important date is at the very end.
The specific law used for this tariff allows it to stand for only 150 days without congressional action. That means in late July, we hit a decision point. The uncertainty can't go on forever. A decision has to be made.
And this right here is the key takeaway. That 150-day deadline, it changes everything. It takes this feeling of perpetual, endless uncertainty and it puts it in a box. It's no longer an endless fog, it's a specific problem with a deadline. And that's what allows us to plan strategically instead of just reacting emotionally.
And all of that brings us to the final question. This calendar gives us a clear runway to a major decision point for the markets. This chaos, it has an expiration date. So the only question left is, 150 days from now, will your portfolio be ready for what comes next?